Have you ever wondered how to predict the change in a stock's price trend? Well, this week, I'm going to teach you how to do just that. Plus, I will do my regular weekly market analysis. We'll look at the day trade of the week on DADA and a market scan in search of opportunity. All right, so welcome to this week's Stockscores Market Minutes. So knowing when a stock's price trend is changing is a really important skill if you want to make money in the market, either by getting in at the right time, but also as an exit signal to get out. And it's actually quite simple. There's a few simple things to look for. I'm going to show you those in just a moment. Now, what we want to understand is the concept of rising bottoms and falling tops. I'll show you in a chart what that looks like, as well as a trend line. And we get out of a upward trend when there is a break of an upward trend line from a falling top, and we can get out and expect an upward trend out of a downward trend when we break a downward trend line from a rising bottom. Now let's look at the charts and see how that all looks. So we're going to do this on multiple time frames, and that's the beauty of this technique, is you can use it as a day trader, as a swing trader, as a long-term investor. Now this would be the sort of chart that a swing trader would look at, and we're going to begin by understanding inflection points. And I've talked about these in the past. It's any little valley or peak on the chart. We call those inflection points, and you can see there's lots of them here. Just find little peaks and valleys, and then you can draw lines across them. So let's draw this downward trend line, something like that. Actually, we're going to go with this one, just across those tops. And then notice that there is an inflection point, a bottom that is higher than the previous one. And we break the downward trend line right there from a rising bottom. That is a signal that the stock is likely to go higher, and it does. Now then, if I draw the upward trend line across these bottoms, something like that, you can see that we broke down through the upward trend line from a falling top, or a series of falling tops. So rising bottoms build, break the downward trend line, stock goes up. Falling tops build, break the upward trend line, stock goes down. And you can repeat that process over and over and over again. Just draw trend lines and look for rising bottoms, break of downward trend, stock goes up. Now that's a short-term chart. We can do that in the longer term as well. Here is a chart of Apple, and this is a 240-day daily chart. Here you can see downward trend line, rising bottom, broke the downward trend line from a rising bottom, stock went on a real tear to the upside. Now this upward trend line, if I was to draw it across these bottoms like that, has still not been broken, and that means Apple is still a hold. If, however, you were following this steeper trend line, we did break that, but there was no falling top. And you can see that Apple went down a little bit, but it also really hasn't broken down significantly yet. So just keep that in mind. Trend lines, rising bottoms, falling tops, inflection points, those simple concepts can help you know when to enter, but also when to exit. All right, let's get into this week's market analysis. First, let me talk about some upcoming webinars that we have that will go into some of these skills in more detail. If you want to learn my approach to investing, please join me on Tuesday, October 20th for how to be a profitable investor. And then on Wednesday, sorry, it says there Thursday, it's actually Wednesday. Let's cross that out, make this Wednesday. On Wednesday, October 21st at 6 o'clock p.m. Pacific time, how to be a profitable day trader. These are free to attend. You just register at Stockscores.com. Just go over to the Stockscores website, go to the trader training menu, down to upcoming events, and you can register right here online. There you can see how to invest in the stock market profitably, how to day trade the stock market profitably, and also next Saturday, how Stockscores trader training can help you make stock market profits. These are all free, and I encourage you to join us for some of those. You'll learn a lot. It's about an hour long, and I think you'll enjoy it. All right, now let's get into the US markets with our regular weekly market analysis. And here is the S&P 500. And let's use some of those skills that we just talked about. If we had a downward trend line there, we broke the downward trend line from a rising bottom, and the market went higher. I can then draw this upward trend line, and you can see that we've just bounced off of it. We are now making a falling top, and so if we were to break down through that upward trend line from the falling top, we would have a negative signal. Generally speaking, this market's been more or less going sideways. We've had gyrations along the way, and so to me it's a neutral chart. Looking at the long-term chart of the S&P 500, and you can see that, that this first upward trend line was broken there, but no falling top. We are now potentially building a falling top, and so if on the weekly time frame we were to break this upward trend line from this falling top, then we would have a negative signal for the overall market. Hasn't happened yet, something to keep an eye on and deserves some attention. Looking at the NASDAQ 100, this is the 30-day 60-minute chart, and again, downward trend line, rising bottom, break of that downward trend line. You can see the market's gone up since then. There's our upward trend line, very similar to the S&P 500. We've pulled back to it. We're bouncing off of it so far, but if we break down next week through that 290, 289 level from this falling top, then I would be concerned. Long-term chart of the NASDAQ, very similar to the S&P 500. Again, no reason to be scared or nervous for a correction yet, but certainly it could happen if we were to break the upward trend line from that falling top. All right, looking at the small cap market, this is IWM, and essentially we've been stuck in this sideways range. There's a slight upward bias to the market right now, some resistance right in here. Not a lot of action in the small caps. We had a little bit of life in the last couple of weeks as we were able to rally a little bit here. I mean, not a bad market, but not particularly good looking either. On to the Canadian markets, and first off we have the TSX, which is the major market in Canada. There you see the downward trend line broken from rising bottoms. We've kind of meandered our way higher, not really done so significantly. Upward trend line still intact. We are building falling tops, so that's cause for concern if and when we break down through it. TSX Venture, which of course is heavily made up of mining stocks, some junior energy companies, maybe a few cannabis stocks, and it has a falling top in the long term. This is the weekly chart of the TSX, and if we were to break down through this upward trend line from that falling top, that would be negative, much like the S&P 500. This is the chart I wanted to talk about next. The TSX Venture, which is our micro-cap market in Canada, lots of mining names, lots of junior energy cannabis stocks, stuck in a sideways range, really being held up by the mining names, which had the big run to the upside. If we can break out of this, great. If we break down to this, be a little bit more concerned. Neither has happened yet. It's a pretty quiet market right now. On to currencies, and the US dollar broke its downward trend line a few weeks ago, but notice no rising bottom. Now we're potentially building a rising bottom, and so if we can break the downward trend line from this rising bottom, then that would point to the US dollar going higher. Hasn't happened yet, but that's what I would be watching for. Canadian dollar has risen fairly nicely in the last few months. It is now up to resistance where we would expect it to get stuck. You can see every time it gets up to that level, it seems to stall. And until it can break out through that from a rising bottom, I wouldn't get too optimistic, but certainly it is trying. On the other hand, if the upward trend line were to break down from a falling top like that, that would be negative. So that's what you want to watch for in the weeks ahead. And on to commodities. Gold, here is the upward trend line. You can draw it something like that. You can see we're holding that. We have a new high there. We could potentially be making a little falling top here, and if we then break down through the trend line, that'll be cause for concern. Hasn't happened yet. We may just bounce off of this and continue higher. I lean toward that. The momentum is to the upside for gold. It will depend a lot on what the US dollar does. If the US dollar goes up, then I think gold breaks down through that upward trend line, and then you want to get real cautious with your mining stocks that you may own. Oil's dead. It's stuck in this narrow sideways range, nothing happening. At least it's stable, but there's no real sign of life there, and so not much in the way of trading opportunities in the energy market. And finally, the fear chart, you can see that we've generally got falling tops in fear, which means that fear is falling. We're in this sort of downward sloping channel. It could come alive at any moment, but for now, there's not a lot of fear in the market. So my ratings then, neutral on both time frames for the US and Canadian stocks. Gold, neutral on both time frames as well. Long term on oil, I am bearish. Short term, I am neutral. Stocks are really wrestling with the uncertainty that comes with an election. And that means we've got lots of volatility, but a lack of consistent trend. We have up days, we have down days, but we're not consistently moving in one direction or another. Now, that may be the case until the election has passed. We've got about 2 weeks to go. And at that point, we're going to get some resolution, and I think you'll see the market start to trend one way or the other. Individual stocks with alpha characteristics can do well in this environment, those stocks trading abnormally, but we have to be nimble with trading them because their trends tend to be fairly short-lived. Gold is really lacking buyer motivation right now, and oil is still very quiet. And as I said, fear is falling. All right, well, now let's go on to the day trade of the week. And the idea behind the day trade of the week is just to give you an example of how I apply my day trading strategies each day with our Stockscores active live service. You can learn more about that at stockscores.com. Essentially, you're watching my screen as it calculates algorithms on every stock that trades in the US, looking for those that are behaving abnormally. And when they do, we get something called an action candle. An action candle is a 2-minute bar that has abnormal price change and also abnormal volume. And if you use that action candle in combination with a good chart pattern, you can pick a winning stock. And this is what we did with DADA on Friday. We had the action candle right there at the open. Notice the very strong volume, the abnormal price move. It's pretty obvious when you look at it. The challenge, of course, is finding these in a timely way. And Active Live is monitoring over 7,000 symbols in real time, looking for action candles. So the entry signal came at 9:32. For every $100 of risk, this trade required 370 shares, which was $12,846 in capital. But of course, when you are trading these higher price stocks, if you desire, you can margin them 3-to-1. Day trading, pretty safe to margin because you're not holding overnight. And so that means that the capital requirement was $4,282, which represented, at the end of the day, a 7.9 times risk gain, or a $790 gain for that $4,300 of capital. That's an 18.4% return on a one-day hold. All right, well, now let's jump over to the Stockscores market scan. And with the Stockscores market scan, we're going to search through the entire market in search of stocks meeting a strategy. So the strategy I'm going to apply this week is called the Abnormal Breaks Canada. We'll take a look at that. Just jump over to the Stockscores website, go to the market scan, and from the pull-down menu, I am going to select Abnormal Breaks Canada. You'll notice that there's a lot of different strategies in there. You can learn my strategies using one of my training programs, and they are available anytime, but we do have some special training coming up here in November. And some of the webinars next week will talk about that, so make sure you register for those. All right, so I found 3. We're going to now take a look at the charts of these 3 to see if they have good chart patterns. What we're looking for are stocks that are breaking from sideways trading with abnormal behavior. And this first stock, GCL, did that on Monday. It broke through resistance from optimism, from low volatility, and the volume was starting to increase. Notice also that the stock scores had started to get higher. I think it's too late now, but this is a great example of what you want to look for. That was at 45 cents. Now here we are 4 days later at 70 cents, so a pretty significant jump on a penny stock. And we can continue to cycle through the charts looking for the right kinds of patterns. Now, not every pattern is good, and this is one that is not good, and let me explain why. Here you have a downward trend line that has been broken. That's good. We actually have a little bit of a rising bottom, so that's good. The problem is that this stock is going to find resistance, a ceiling price, there and there. Those were the old price peaks. And what that means is that when it gets up to that price, it's probably going to get stuck. Well, in this scenario, my risk-reward trade-off is not good enough. I want the upside to the ceiling, upside to resistance, to be 2 times the downside to support. And it's just not that way with this particular stock. So although I think the stock is more likely to go higher than lower, I don't think it presents us with enough reward for the risk we have to take. And that's an important lesson. It's not just about buying the right stock, but also managing risk effectively, and that risk reward trade-off is oh so important. So remember, we have some free webinars coming up next week, Tuesday and Wednesday and Saturday. Go to stockscores.com/upcoming events to take a look at those. I hope that you've enjoyed this week's video. If you have, please click on the like button, leave a comment, subscribe to the channel, click on the notifications bell. You know the drill, do it all. It makes me happy. I hope you have a great week in the market and trade well.